This is a Fox Business Alert, and what could be a prelude to a deal between the studios and the writers, Hollywood directors and producers have indeed inked a 3-year pact. The TV writers will now examine the deal and decide whether they will accept a similar agreement. Guys, I've told you before that what this all means is that we are about to see this dam break and that YouTube is about to get legalized video all over, guys, because they can't. That's why these deals have not been done. That's why the writers have been striking, because they haven't been able to figure that out. Moving on to the markets. So, by the way, that means Google's a great trade right now. If this really does break, Google's going to run some. There's a great live album from the Bon Scott AC/DC days called "You Want Blood? You Got It." Well, that's about the best way to describe today's action. After a futile mini rally to start the day, the action headed straight down. There wasn't any particular sector that led the markets down. It was back to that broad-based panicky selling action that has characterized the last 15% move, which, by the way, 15% move has been down that last 15% move, right? Oil stocks today, guys, down big. The financials down huge. Media stocks like Disney, CBS, and Time Warner, which will bounce, by the way, once there's a deal put in place with the writers, were also trashed, with most of them hitting 52-week lows to boot. GE, quick, guys, is that a financial stock or a media company? I can't tell. Maybe it's a manufacturer. Anyway, it also hit a 52-week low today. Talk about, you also have after hours, you got IBM, you got Xilinx, you got AMD. We mentioned all those early. None of them were very bad. They actually were all pretty good. You might, and guys, especially when you got my accountant writing me yesterday panicky emails, and you got Yahoo Finance talking about the angst is finally in the market, guys, we're probably going to have a bounce. Before we move on, though, all the talk on tech lately has got a lot of you guys thinking I'm going to answer a couple of your emails. Jay in Florida writes, some great names have been pushed absurdly low. Didn't you say a few years ago that Intel below 20 was a buy? Cisco, Apple, Google, RIM, please let us know what you think. Guys, I like them all a lot more now than I did back in late October when I came on the show and said, guys, I'm going outright bearish. I'm not outright bearish anymore. The 15% pullback, we could call it a refreshen if you want, refreshes a lot of that bearishness. So, you know, I'd be putting some money in the market if I didn't have money in the market, and if I had been smart enough to take some out back in late October. Carol in Michigan thinks I might be a little hard on the commodities. She writes, most of the commodity stocks from copper companies to oil companies are totally cheap, many trading at less than 10 times earnings. How can you possibly be bearish on such cheap stocks? There's an old saying on Wall Street, and if you think it through, it makes a lot of sense, that you always want to sell the commodity stocks, the cyclical stocks, when they're cheap, and you want to buy them when they're expensive. Why? If you bought those stocks back in 2002 when all the commodities were trashed and the economy was bad, well, you're up 500, 700, 1,000%, and now all of a sudden they're cheap. Guys, sell them when they're cheap. Wait till they're really expensive again, then you can buy them. Don't forget to email either Rebecca or me. I'm Cody at foxbusiness.com. She would be GoGo at foxbusiness.com. We're also on Facebook. I'm also on CodyWillard.com. Reach out to me, guys. I'll answer anything you ask.